Good morning, students. Welcome you all once again in the revisionary class organized by Board of Studies of ICAI. Friends, today we'll start revenue from contract with the customer. Very, very important standard from the real life as well as from the examination perspective. So we will revise this standard in 2 days, today and tomorrow. And we will do some questions, right? And through the questions, we will get more deeper into the concepts. But before starting this standard, because it's a very lengthy standard, right? So let me take you through the helicopter view of this standard with the help of one of the example which I used to cover always. So friends, this revenue from contract with the customer, this standard, which is Ind AS 115. This standard was applicable from 1st April 2018 in India. In IFRS, it is IFRS 15, okay, which was applicable from 1st January 2018 globally. And in accounting standard, there are two standards, AS 9 and AS, which one? AS 9 and AS 7. Construction contracts and revenue, right? AS 7 and AS 9. There are two standards in India in terms of accounting standard, okay? So in Ind AS, it is Ind AS 115. Friends, this Ind AS 115, the title is revenue from contract with the customers. It means when you are earning a revenue, and what is meant by revenue? Revenue is an item. Revenue is an item which is generated from the ordinary activity of the entity, right? And when you enter into a contract with the customer, and who is the customer? Customer is a party who is receiving goods and services. Which goods and services? Which are the output in the ordinary activity of the entity, right? So this is the meaning of customer. So to cut a long story short, in this standard we are going to talk about those kind of item, those kind of money, those kind of those kind of situation where the company is earning its bread and butter through the customer, right? For example, let's say Reliance Industries Limited. So Reliance Industries Limited has invested in so many companies and they are earning dividend. So whether the dividend will come under revenue from contract with the customer? Yes or no?
No.
No.
No, because
So,
no, because earning a dividend, right, is not a ordinary course of the entity of Reliance. Reliance bread and butter is not only to earn dividend. So Reliance has a surplus fund. They have invested in the multiple companies. They have invested in the equity share of the companies, and hence they are getting the money as a dividend in terms of return on the investment, right? So those companies in which Reliance has invested and getting a dividend, for example, Reliance has invested in Infosys, and Infosys is paying dividend to Reliance as a shareholder, right? So Reliance output, okay. So Reliance is not transferring its output, like Reliance is in the business of refinery, gas, okay. So Reliance is not selling its gas or its oil to Infosys, okay. Reliance has invested in Infosys, and that is why they are getting a dividend out of it, okay. So this dividend income is not a revenue from contract with the customer, because Infosys is not the customer of Reliance, number one. Number two, making an investment is not an output of the goods and services which is Reliance is rendering to the customer, okay. Friends, this standard measures all the revenue from all the companies, from all the sectors into five-step model, into the five-step model. And what are those five-step model? These five-step model are in itself like a chapter, okay. So every five steps are like one chapter. So total five step is like five chapter, okay. So when you prepare for your CA final exam, and again I am reiterating and repeating that these are the revisionary classes. So you are expected to go through with the last video, with the last lecture which I have taken on Ind AS 115, because I have taken in detail where I have given small examples to understand the concepts with the help of the Excel file, okay. So friends, into the five-step model, the first step is identify the contract, right? You need to identify whether the contract is with the customer, right? So you have to see, is it a contract with the customer? I mean to say, the contract with the customer could be through a written or through a oral contract. Okay. And you need to look at whether the customer is able to pay the money. For example, you are providing goods and services to a customer who is already bankrupt. Okay. He does not have a good history or past history of paying money also. He is bankrupt also. So in that case, till the time it is not established that your money will be received, you will not recognize the revenue from that customer, right? So these kind of things, combination of contract, segregation of contract, these kind of aspects are there in the topic number one, step number one, which is identification of contract. You need to identify whether this item is, whether this contract is with the customer. Okay, you need to identify the contract. Contract does not mean signing an agreement immediately. For example, you are going to the grocery shop and you are buying a grocery from Reliance, from Big Bazaar, from DMart. So when you are purchasing grocery, you are paying money to them, they are raising an invoice. It means there is a valid contract between the customer and the DMart. Okay. Performance obligation. Friends, this Ind AS 115 is a performance obligation related standard. Okay. So if you have entered into a contract with the customer, right? So this Ind AS 115 is a customer centric standard. Customer centric standard. What does it mean by customer centric standard? So if the earning, if the company has to, if the company has to recognize a revenue, so once it is established that yes, it is a contract with the customer, then the company looks at the performance obligation. What are the promises the company is making to the customer? What are the promises the company is making to the customer, right? So when I'm talking about the promises the company is making to the customer, means what are the deliverables to the customer? Okay. And in that case, you need to look at whether the goods and services are distinct or not, whether the goods and services are different or not, distinct or not, right? And you need to look at whether the goods and services are distinct, okay, and whether the customer will be able to use those goods and services with the available resources, right? For example, for example, a air condition company is selling an air condition unit, and that company is also providing the installation service. Okay, the company is also providing the installation service. Okay, so even though, so while let's say Shweta has purchased the air condition from that company, and that company has not delivered. So one part. So basically, let's say the company has delivered the AC unit, but the company has not provided the installation as of now, right? So tell me, even though this company will not send its mechanic, or let's say company will send, I don't have mechanic right now, and he will come after a week. Will you able to get your AC installed by some other mechanics? Yeah.
Yes, sir.
Yes, it can be installed. It can be installed. Means the customer will be able to get the benefit of goods and services at its own, or with the help of readily available resources, or with the help of readily available resources, right? So in this case, that the selling of AC unit and providing the installation service, these are two different performance obligation. These are two different performance obligation, right? But let's say Mr. Ajit, Mr. Ajit has purchased a machinery, and it is a highly customized machinery. It is highly customized machinery, right? And for the installation of machinery only, the person from the company can come and install that machinery. Okay. So now the company has delivered the machinery to Mr. Ajit in its in its factory premises, and which is on, let's say, 25th of March 2025. And on 5th of April, they have provided the installation service. Okay, on 5th of April. So the question is, in this case, how many performance obligation are there? Is it one performance obligation, or is it two performance obligation?
Two.
Two performance
Two.
obligation, or one?
Two.
So friends, goods and services are not considered as a distinct, right? It will not be considered as distinct if the customer will not get the benefit at its own, or with the help of readily available resources. Tell me, if the installation will not happen, whether Mr. Ajit will be able to get the installation done from outside?
No.
No. Why? Because it is a highly customized machinery. It is highly integrated, right? So in this case, the machinery supplier company cannot recognize the revenue until and unless the installation will happen. So sale of machinery and the installation is considered as a single performance obligation, because the customer will not get the benefit of those goods and services till the time it should not be installed. Third example. So you have purchased, you have ordered a computer, a laptop from the Amazon, or a computer from Amazon. Amazon has sent the parts of the computer. Okay. So Amazon, you have ordered, and now Amazon has to deliver to your premises. Okay. So Amazon, whether this delivery, till the time the delivery will not happen, whether Amazon will recognize revenue?
No.
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 Answer is no. Because in that case, you cannot get the delivery because you are not aware from where the goods are coming, right? At times, because just day before yesterday, I ordered a pen from Amazon 3 days back. And I am living in Gurgaon, right? So Delhi, Gurgaon. So the pen has come from Mumbai, right? So I was surprised that a person who is living in Delhi and Gurgaon, and there are a lot of shops, there are a lot of availability of those kind of pen, but why it is coming from Mumbai, right? So you are not aware, and Amazon will recognize the revenue only upon delivery. Okay, only upon delivery, and when the right to refund period will expire. So friends, now coming back to this example, we are talking about the performance obligation. So in this case, Amazon has delivered the computer parts, right? Now they will send an engineer for installation, for assembling, right? So tell me, if Amazon has sent the parts of the computer, whether customer will get the benefit of those parts
No, sir.
till the time it is assembled? Answer is no. A customer expectation was not to receive part, customer expectation was to receive computer,
Laptop.
right? Laptop and computer. So friends, in this case, Amazon has single performance obligation. Single performance obligation means till the time the parts are not getting assembled by the engineer, which is sent by the Amazon or by the company, Amazon will not recognize the revenue, or let's say the company will not recognize the revenue, because it is highly integrated, highly customized, right? And generally, you cannot get the parts assembled by any outsider parties. You will wait for the company's mechanic to come and get it installed, right? So friends, we will discuss some examples of performance obligation. After identification of contract, so there is a second step, which is performance obligation. And the moral of the story is, when you are looking at a performance obligation, you need to see, can the customer get the benefit independently? If answer is yes, that performance obligation is a separate performance obligation. For example, in case of a normal thing like refrigerator, air condition, okay, so these can be installed by the customer by getting the service from the independent mechanic. Okay, but if the product is highly customized, highly integrated, right, in that case, of course, till the time the installation will not happen, assembly will not happen, it will not be considered as a single separate performance obligation, and the entire obligation will be considered as a single performance obligation, and revenue has to be recognized when the installation will happen. Okay, then friends, like in performance obligation, we will also discuss the question on the reward points. And this question came in the last exam, the question on the reward points. So when you are using your credit card, you got a reward points. When you are purchasing goods from Louis Philippe, your garments from Louis Philippe, right, clothes from Louis Philippe, you get a reward points. When you take sweets and snacks from Haldiram and Bikaner Wala, you got reward points. So when you travel through Air India or Indigo, you got the reward points. Okay. So these reward points are just like a loyalty points. Why companies are giving these reward points to the customers? Because of the loyalty engagement, so that the customer will be associated with you forever. Okay. So whether this reward point, for example, you are purchasing goods worth 1,000 rupees, okay, and the company is giving you 10 reward points, which is equivalent to 10 rupee, right? So whether this reward point is a separate performance obligation, answer is yes. Why? Because you are getting 1,000 rupees as a company, and why you are receiving 1,000 rupees? You are receiving 1,000 rupees because you have sold goods to the customer. Let's say Air India. Air India has sold a flight ticket to a customer from Delhi to Mumbai for 10,000 rupees. And Air India has given a reward point of 100. Okay, 100 reward point. And this 100 reward point is equal to 100 rupee. So friends, by using these reward points, the customer can book the flight ticket in future. Okay, so it means Air India is receiving 10,000 rupees, and in this 10,000 rupees, Air India is selling a ticket from Delhi to Mumbai right away. Number one performance obligation. Number two, Air India is also obligated to provide, right? So Air India is also obligated to provide the ticket in future in redemption of these reward points. For example, if this customer will accumulate, let's say 2,000 reward points, and he wants to travel to Delhi to Chandigarh, so by using these reward points, he can book the ticket from Delhi to Chandigarh. Okay. So in that case, so this money which Air India is receiving right away, there are two performance obligation. One, the performance obligation is right away sale. Number two, the performance obligation is provide the loyalty points which can be redeemed in future against the future goods and services, right? So we will get more into detail with the help of the question, since it is a revisionary class, and hence I am assuming and presuming that you guys have gone through with the detailed video of Ind AS 115, which was covered in 4 to 5 classes, okay, in October 2024. Friends, then transaction price. Okay, then we will discuss the concept of transaction price. Your transaction price is a price which the customer is paying and the company is receiving in lieu of selling goods and services. Transaction price is a consideration. It could be variable consideration, it could be fixed consideration. Okay, so we will discuss the concept of the fixed consideration, variable consideration, etc., etc., in this case of transaction price. So we will also discuss the volume discounts. Okay, warranties, volume discounts, etc., etc. Okay. Okay, allocation of price. Friends, once you identify it is a contract with the customer, once you identify that there are multiple performance obligation or single performance obligation, once you identified the transaction price, then you allocate the transaction price into the multiple performance obligation. Okay, right? So how do you allocate the transaction price? So there are multiple approaches for allocation of transaction price. For example, allocation of price. The price will be allocated to multiple performance obligation. Using the various techniques. For example, there was a amma approach, adjusted market assessment approach, cost plus approach, residual approach. So we'll do a question on this part also. Okay, then the revenue has to be recognized at a point in time or over a period of time. Okay, so revenue has to be recognized at a point in time or over a period of time. Okay, friends. Then there are disclosures, and we will also cover one of the concepts on service concession arrangements, right? The toll road arrangement. So we'll also solve one question on service concession arrangements. I hope I have given just a high level overview of Ind AS 115, right? And now I'm getting more deeper into this, and with the help of this example, which I always call it as a helicopter view. Okay, so let's quickly discuss this example. Yes, Abrakesh?
Sir, chat is disabled actually. So it's, for short answers, we did not go to microphone.
Yes. So let me enable the chat. Chat is, I think, enabled. So Ashokji, can you please check if the chat is enabled or not?
Sir, enable.
Chat is enabled, Abrakesh. Yes. So let's
So I
quickly
cannot
discuss.
access, sir. I mean, I don't know why. Symbol is there.
But Saminathan is able to, reply. He has replied me. So the other students are able to, respond me. So probably Abrakesh, you can log off and then you can log in. All the other students have responded. They are able to respond on the chat box. Okay. Yeah. Let's move on. Voltas Limited has sold an air condition to Mr. Ram Voltas Limited has sold an air conditioner to Mr. Ram on 15th March 2023 for rupees 50,000. So this Voltas company has sold an air conditioner to Mr. Ram on 15th March for rupees 50,000. Voltas bread and butter, Voltas main ordinary activity is to sell refrigerator, and Mr. Ram is the customer. Okay. The company has only delivered the AC unit till 31st March 2023. So while closing the books of accounts up to 31st March 2023, the company has only delivered that AC unit. Okay. The company promised to provide AC unit, stabilizer, installation, and one free service every year to the customer over a period of 2 years. So friends, this company has sold air condition to Mr. Ram on 15th March, and up to 31st March, the company has only delivered the AC unit, and the company has promised to provide AC unit, stabilizer, installation service, and one free service every year to the customer over a period of 2 years. Okay. The stabilizer and installation service was provided on 27th May to 20th May 2023. So after delivering the AC unit, this company has provided the installation and stabilizer on 20th May. Right. And the customer has availed the free service in November 2023, and one maintenance service customer has availed in November 2023. Being an accounting expert, the company wants your guidance for recognition of revenue in 22-23, 23-24, and 24-25. Assume that the customer has not availed the second maintenance service. Okay. So one free service every year to the customer over a period of 2 years. Okay. So it means in the first year, they will provide the service up to 15th March 2024. Then second is up to 15th March 2025. So let's analyze this. So what is my step number 1? What is my step number 1? Identify the contract with the customer. Is it a contract with the customer?
Yes.
Yes, this is a contract with the customer. Identify the performance obligation in the contract. Tell me how many performance obligation are there in the contract?
3 or 4, depending how we consider maintenance service.
4, right? So AC unit is an independent item. Stabilizer. If this company Voltas will not sell stabilizer, will you be able to procure stabilizer from the other shops?
Yes, sir.
Yes.
Can you purchase the stabilizer independently? Answer is yes, because it is not highly integrated, it is not highly customized. Okay, you can purchase stabilizer and you can install with the AC. Okay. Installation. Whether installation service, if Voltas would not have provided the installation service, whether the customer would get the installation service from outside.
Yes, sir.
Yes.
Yes, it can avail. So it means stabilizer is a separate performance obligation. Installation is a separate performance obligation, and the maintenance service. This maintenance service is not a highly customized or integrated or a specific kind of a service. Any mechanic can, provide a service to the stabilizer. Any mechanic can do the service. Okay. So any mechanic means who is dealing in air condition. So whether this service, whether this maintenance service, whether this cleaning service, is it a highly customized or integrated service that if you
No, sir.
purchased a air condition of Voltas, only Voltas people will come and they only will be able to do the service? Answer is no. So in this case, there are 4 performance obligation: air condition unit, stabilizer, installation service, and maintenance service. 2 maintenance service over a period of 2 years. So how many performance obligations are there? There are 4 POs. There are 4 POs. POs means performance obligation. Then determine the transaction price. What is the transaction price in this question?
50,000.
50,000 is the transaction price. Okay, 50,000 is the transaction price. Then allocate the transaction price into the multiple performance obligation on the basis of standalone selling price of the performance obligation. Tell me why it is important to allocate the transaction price to the multiple performance obligation. Tell me.
Because to know the individual transaction price of every POs.
Yeah, so that is what I'm asking. Why it is important to know the transaction price
Because
of every performance obligation?
Yeah, to recognize
because the
revenue.
POs are available in separate time.
Because it is a separate performance
P-
obligation,
POs,
and when it is a separate performance obligation, the entity has to recognize the revenue for those performance obligation which are completed, right, which are delivered. For example, while this company has received the entire 50,000 rupees on 15th March 2023, so when this company will close the books of accounts on 31st March 2023, whether in 31st March 2023 entire 50,000 will be considered as a revenue? The money has
no,
come. Why?
no,
No.
Why you are saying no?
because the other deliverables are not delivered at that time. That's why.
Yes, because other performance obligation, other deliverables, other milestones have not been fulfilled, not been satisfied, not been completed by 31st March 2023. But we have received, Voltas has received 50,000 rupees, and hence it is important to allocate the transaction price to the multiple performance obligation so that the entity will be able to recognize the revenue for those performance obligation which are delivered, and the company will recognize a liability for those performance obligation which are undelivered. Okay, so allocate the transaction price into the performance obligation on the basis of standalone selling price. For example, let's say the price of AC unit is 48,000 individual price. Okay, price of stabilizer is, let's say, 4,000. Price of, let's say, installation service is 1,000. Price of maintenance service is 2,000. So what is my total? What is my aggregate of standalone selling price? 55,000, right? So now how will I allocate my transaction price? What is my transaction price? 50,000 multiply by
Divide
48, divide
45,
by
55.
55. 50,000 multiply by 4,000, divide by 55,000. 50,000 multiply by 1,000, divide by 55,000. 50,000 multiply by 2,000, divide by 55,000, right? So what we got here? We got the transaction price, allocated transaction price into the multiple performance obligation. Now we need to recognize the revenue at a point in time or over a period of time. So when you will recognize revenue, AC unit recognize AC unit, you will recognize revenue at a point in time or over a period of time.
80 point of time.
At a point in time when the goods are delivered at a point in time. Stabilizer at a point in time
See,
or over the period of time?
80
At a
point of
point in
time.
time. Installation at a point in time or over the period of time?
80 point of time.
Because installation is a single service. When you deliver, when Voltas deliver the installation service, on that day Voltas will recognize the revenue. Maintenance service
Over the
period.
period of time.
over a period of time, because in the 2-year period, maintenance service has to be provided. Okay. So friends, these are the 5 steps for any, revenue recognition, for any revenue measurement. Now let's discuss the, shall I also discuss the accounting entries?
Yes.
Okay. So what is the accounting entries in the books of the Voltas Limited? So how much Voltas Limited has received? Bank account debit how much? 50,000. पैसा तो आ चुका है ना? To revenue from sale of AC unit. How much is the revenue from sale
40,
of AC unit? How much?
43,636.
43,636. And remaining will be deferred revenue liability. Remaining will be deferred revenue liability. 6,364. Okay. Being revenue recognized on the sale of AC unit. Right. Friends. Now, what is the accounting entry in the next year? So in the first year, your revenue will be 43,636. What is the accounting entry in the second year?
Deferred revenue to
In
revenue
20th
from
May,
stabilizer.
on 20th May, 2 services has been provided. So what was the service? Stabilizer and installation service. So what I'll do? I'll deferred revenue liability, I'll debit. So deferred revenue liability debit. Debit by how much amount? Debit by what amount? 3636 plus 909.
Plus 909.
Yes. So 4545 to revenue from stabilizer and installation. Okay. So what is the amount which is remaining now? So we have recognized a revenue of 4545 in this year. and we have recognized a revenue of 43,636 in this year. So we have recognized a revenue 48,182, but we have received 50,000. So remaining amount on 30th November 23, deferred revenue liability debit 909. Okay, so 909 or what? 1818. 1818 to revenue from first maintenance service. Is that okay?
No, sir. 909.
Why no? Divide by 2.
One services is
18,
completed.
18,
Yeah.
18 divide by 2, right? And the
Yeah.
second service in FY 24-25. If the customer will avail, well and good. If customer will not avail, it will be expired. So the company will recognize the revenue, deferred revenue liability to revenue from the second maintenance service, right? So this is the total revenue recognition. You can see for the product which were sold on 15th May 2023. In 2023, this was the revenue. In 23-24, this was the revenue. In 24-25, this was the revenue, right? This is the total revenue. Is that clear?
Yes, sir.
Is that clear, friends?
Yes, sir.
Okay, right? So if it would have been your accounting standard AS9, in that case, what would be the revenue in the first year? What would be the revenue in the first year? अगर ये accounting standard होता, AS9 होता तो?
Full amount.
Full amount, entire 50,000, full amount. Because in accounting standard, this concept of, performance obligation based recognition was not there. Okay. Correct. Friends, let me take you to the question which is given by Board of Studies of ICAI. So let me take you through the questions. And please confirm if my Word file is visible, where the questions are there. Please confirm if the Word file is visible. Is it visible?
Yes, sir.
So let's go to question number 2. Let's go to question number 2. An entity enters into a contract with 1,000 customers. Each contract includes the sale of one product for rupees 50. So these are the rupees, these are the INR. Okay. So INR 50, 1,000 total products into INR 50 is equal to 50,000 is the total consideration. So there are 1,000 customer and every customer will get a product of rupees 50, right? So the total consideration is 50,000 rupees. Cash is received when control of a product will transfer. Okay. So when the cash will received, when the goods will be transferred, the control of the product will be transferred to the customer. The entity's customary business practice is to allow a customer to return any unused product within 30 days and receive a full refund. The entity's cost of each product is rupees 30. In the first paragraph, there are 1,000 customer in the first paragraph. There are 1,000 customers. And this company practice is to return any unused product within 30 days. Any unused product within 30 days. So what does it mean? What does it mean? Means there is a return policy. So the customer has a right. The customer has a right to return. The customer has a right to return. Okay. And the cost of the product is 30. So sales price is 50. Cost of the goods sold is 30. Okay. So looking at the first question and assuming you guys have already attended or you guys have already covered the detailed video on Ind AS 115, whether this entire 50,000 rupees, entire 50,000 consideration for 1,000 customer, whether the entire revenue recognition needs to wait or we have to recognize some revenue out of this transaction.
We have to recognize revenue to the extent of 970 products.
So my question was, because all this customer will have a 30 days return policy. Devrat, please mute yourself. Yes. So my question was, since every customer has a right to return in the next 30 days, so whether the company should wait for the revenue recognition for the next 30 days, or the company should estimate what is the probable reversals which will come. So the company will estimate and wait for those revenue recognition, but otherwise for rest of the revenue, the company can recognize immediately without waiting for 30 days to expire. Yes,
Probable amount.
probable amount.
Company
Based
will
on
estimate.
Based on the estimate which the companies estimate that yes, out of 1000 customer, let's say 10 customer, as per the past trend, as per the past history, as per the estimate, the company is estimating probably you know 10 customers will return. 10 customers will return. Okay, so that money has to be waited till 30 days, otherwise the rest of the amount can be recognized as a revenue, which standard also says in terms of transaction price. Standard says that whenever there is a variable consideration or whenever there is a right to return, the company should recognize the revenue to the extent the company is highly probable that the reversal will not occur. Okay. Yes. So the entity applies the requirement in Ind AS 115 to the portfolio of 1000 contract because it reasonably expects that in accordance with paragraph number 4, the effect on the financial statements from applying these requirements to the portfolio would not differ materially from applying the requirement to the individual contracts within the portfolio, right? So basically, the company is saying that we will apply this requirement to the entire portfolio, right? Since the contract allows a customer to return the products, the consideration received from the customer is variable, right? You are not aware whether you have to return that money or not, right? It is variable. To estimate the variable consideration to which the entity will be entitled, the entity decide to use the expected value method because it is the method that the entity expects to better predict the amount of consideration to which it will be entitled. Using the expected value method, the entity estimates that 970 product will not be returned. Means the product sent to 970 customer will not be returned, and applying the expected value method, which is also known as a probability weighted method. So the company has computed, calculated, estimated basis on some probabilities, and the company has estimated that 970 product is not likely to be returned, right? There is no reversal. The company is highly probable that the reversal will not come for this consideration relating to 970 products. So what does it mean? It means the remaining 30 products, the refund can be arised. The product can be returned. The entity estimates that the cost of recovering the products will be immaterial and expects that the returned product can be resold at a profit, right? Determine the amount of revenue, refund liability, and the asset to be recognized by the entity for the said contracts. So this question is asking you that, see, the consideration, the money received is 50,000. So this question is asking you, out of this 50,000, what is the amount of revenue you are going to recognize? What is the amount of refund liability you are going to recognize? And what are the asset you are going to be recognized from the above transaction? Tell me.
970 into 50.
So
That
what is
will
the
be
bank? Let's
48,500.
discuss with the help of the accounting entry. From what amount your bank will be debited?
Bank account will be debited with rupees 50,000
Please write the accounting entry. Bank account debit 50,000. Okay.
to
So
refund liability.
bank will be debited by 50,000. And what is your revenue which is going to be credited?
48,500.
48,500.
So 970 into 50. So what is my
Yes.
970 into 50? My 970 into 50 is 48,500. So bank account debit to revenue. So 50,000 debit to revenue 48,500. So what I'll do for this 1,500?
Refund liability.
Refund
Refund
liability.
Yes.
Refund liability.
So credit refund liability 1,500. So I've recognized a revenue of 48,500. I have also recognized a refund liability which may arise in future. So refund liability of 1,500. So tell me, my entire inventory has gone out. Okay. My entire inventory has gone out. And of course, if I'm recognizing a refund liability, which I am forcing that I have to, refund this money. So when I'll refund this money, do I have any right to get the product also as a company?
Yes, sir. We will receive the asset return back.
Yes, sir.
Yes, I will receive back my inventory. Okay. For example, Saminathan is a customer. So he wants to return that product to me. So of course I'll return the money to him, but I will also ask, where is my product? Okay. So it means with this refund liability, I'm also getting a right to receive my goods, my inventory back. So what is the accounting entry for that? What is the accounting entry for that? उसकी accounting entry क्या होगी? Right to receive inventory account debit. Right to receive inventory account debit to what? Are you clear on the accounting entry or not, friends? So the first entry, bank account debit. Bank account debit, right? To revenue credit to refund liability. What is the amount? 50,000. 48,500. 1,500. Do you expect any accounting entry? Further any accounting entry? ये रिविजनरी क्लास ही है ना? Right to return, right to receive.
Sir, it will be cost of sales account debit, right to receive account debit to inventory.
See, the inventory has moved out, right? The inventory has gone out, correct? So what is my next accounting entry? Revenue entry तो मैंने कर ली. मेरी दूसरी accounting entry क्या होगी revenue के बाद?
Sir, cost of sales.
Cost of sales.
Right to receive asset account या right to receive inventory account debit to inventory.
So first of all, right to recover product, you will debit asset. Right to receive inventory, you will debit asset. By what amount?
Sir, right to recover asset will be
1,500.
of 900.
What is the cost of my product? 30 rupees.
30 rupees.
And how much is the product? 30.
30 products, so it will be
Product is
900.
30. Product is 30 now.
Yes, sir.
Correct. So my cost. So my right to receive inventory is how much? Right to receive inventory is 30 into 30, 900. Now what should I
Yes.
credit? What should I credit?
P&L.
P&L what? So when I sold goods, my entire inventory has moved out. Okay. So my entire inventory has moved out when I sold goods. Okay. So I have debited one asset that I will receive this inventory, and this inventory will be at cost. This inventory will be at cost. Okay. Right. So this inventory will be at cost. So now I have debited an asset, but what should I credit? What should I credit? I should credit what? Inventory.
Yes, sir.
I should credit inventory. And what is the value of this inventory?
30,000.
No. So right to receive inventory has to be credited with the full amount. Or what?
No, 900, sir. Sorry.
It has to be 900. So
900. Sorry.
see, this right to receive inventory is 900. Credit inventory is 900. Okay. Credit inventory is 900. Right? Is that clear?
Yes, sir.
Is that clear or not clear?
Sir, clear.
Okay, so one entry you will pass cost of goods sold account debit to inventory. That is for the 970 product. Okay, so what is the chain of the entry? Just think about. First of all, your inventory has out. How much product has been out from the company?
970.
नहीं, कितने प्रोडक्ट डे वन पे कितने चले गए? डे वन पे 1000 प्रोडक्ट, 1000 product has moved out. Okay, so what is the value of the inventory of 1000 product?
30,000.
30,000. 30 into 1000.
Yes,
So
sir.
you will credit your inventory by 30 into 1000. आपके पास 30,000 की इन्वेंट्री चली गई. ओके, 30,000. बट ये जो 30,000 की इन्वेंट्री गई, इसमें से to the extent of 30 inventory, to the extent of 30 product, you have a right to recover. You have a right to recover,
Yes,
right? So 30 into 30, 900 is right to recover asset account debit, and 970 into 30, what is that? That is cost of goods sold debit, है ना? टू द एक्सटेंट ऑफ 970 प्रोडक्ट आप क्या करोगे? क्योंकि आपने रेवेन्यू रिकॉग्नाइज किया है, तो आप उसका कॉस्ट भी रिकॉग्नाइज करोगे ना, कॉस्ट ऑफ गुड सोल्ड पीएनएल में, तभी तो प्रॉफिट आएगा. यस और नो?
Yes.
So what is the first entry? Let me give you this first entry. What is the first entry? First entry is cost of goods sold डेबिट. आप कॉस्ट ऑफ गुड सोल्ड को कितने से डेबिट करोगे?
30,000.
कॉस्ट ऑफ गुड सोल्ड को डेबिट करोगे 970 प्रोडक्ट जितना आपने रेवेन्यू रिकॉग्नाइज किया है इनटू 30. व्हाट इज दैट? एंड आप इन्वेंट्री को कितने से क्रेडिट करोगे? टू इन्वेंट्री. बाय हाउ मच ऑफ प्रोडक्ट यू विल क्रेडिट योर इन्वेंट्री?
29,000, sir.
इन्वेंट्री को कितने से क्रेडिट करेंगे?
30,000.
1000 into 30. इन्वेंट्री तो चली गई ना, 1000 into 30, लेकिन आपने पीएनएल को डेबिट किया है 970 से. व्हाई? because you are recognizing a revenue of 970 product, so you have to recognize a cost of 970 product. Correct? So what about the remaining 30 product? Remaining 30 product is my
Right
to receive.
right to receive inventory. So while my inventory has gone out, but I have a right to receive my inventory back. I have a right to receive my inventory back. Okay, ये वाला सबको क्लियर है या नहीं है? So what is my debit? What is my debit amount? 970 into 30. What is the debit amount?
29,500.
29,100.
100.
And what is my credit amount? 30,000.
30,000.
I hope this is clear to everyone. What is my second entry? What is my second entry? My second entry is bank account debit. Now I'll recognize the revenue. So bank account debit 50,000, and this 50,000 is with 1,000 multiplied by 50. And revenue I've recognized with what amount? 970 multiplied by 50. So can you see? I have recognized the revenue in the P&L for 970 product, and I have recognized the cost in the P&L for 970 product. सही है? Yeah?
Yes.
Is it clear? Not clear? Refund liability. So remaining refund liability I'll recognize. What is my refund liability? 30 product multiplied by 50 rupee I have to refund. So I have to credit a refund liability of 1,500 rupees, against which I have a right to receive my inventory at 900 rupees. Correct? Correct? Entry has balanced. ये 600 का डिफरेंस क्या है? 600 का डिफरेंस है अनरियलाइज्ड प्रॉफिट. जब मेरे गुड्स मेरे पास वापस आ जाएंगे, सो मैं 30 रुपए की कॉस्टिंग पे रखूंगा. अगर मैंने बेच दिया होता तो क्या होता? तो मुझे उस पर 20 रुपए का प्रॉफिट और हो जाता. Right? Whether this accounting entry is clear to all of you, my dear friends? Can you please write down these
Yes,
accounting entry? Have you written down these accounting entries? Yes. So in transaction price, these are the concept of variable consideration. Whenever the customer has a right to return, okay. So in that case, the entity will estimate what is the amount where the entity is highly probable that the entity is not going to refund the money. To that amount, entity will recognize the revenue, right? And over and above, till the time this 30 days will expire, the company will, 30 days will expire, the company will recognize the refund liability and the company will recognize the right to receive asset. What happened? Let's say after 30 days, assuming no one has returned the product, no customer has returned the product. What is the accounting entry now?
Refund liability debit to right to receive credit.
So refund liability you will debit, right? You will debit refund liability.
No, right to receive.
So refund liability you will debit by what amount? By 1500?
Yes.
You're
Yes.
not going to refund. But do you have any right to recover now? Because nobody has returned and you have recognized revenue. So you will
No.
credit your right to recover asset. Credit करोगे ना?
Yes.
Yes.
ऐसा थोड़ी होगा revenue भी recognize कर लो, credit भी कर लो, right? So right to receive inventory, to right to receive inventory. Credit. अब रिफंड लाइबिलिटी जब आप डेबिट करोगे तो रेवेन्यू भी तो रिकॉग्नाइज करोगे, जैसे आपने
Yes.
इसका किया था टू रेवेन्यू, आप ये करोगे ना एंट्री,
6.
ये
Yes,
किस
sir.
वैल्यू
Yes.
से करोगे,
600.
ये किस वैल्यू से
600.
करोगे?
600. No.
वाई 630 इंटू
No, no.
30 इंटू 50,
To 50.
1500 ही तो होगा,
15.
जितना आपने रिफंड लाइबिलिटी रिकॉग्नाइज किया था उतना ही तो होगा. आई डोंट नो व्हाई यू आर सेइंग 600. सो लेट्स से you recognize a revenue in the P&L for 1500 rupees. You debited your liability by 1500 rupees and you credited your right to receive inventory by 900 rupees. So what is the debit here? Cost of goods sold. आपको याद है आपने यहाँ पर कॉस्ट ऑफ गुड्स सोल्ड सिर्फ 970 एसेट्स का लिया हुआ है. आप रेवेन्यू 50 रुपए का रिकॉग्नाइज करोगे तो कॉस्ट भी तो 30 की रिकॉग्नाइज करनी पड़ेगी P&L में.
Yes, sir.
तभी तो
Yes, sir.
प्रॉफिट 20 रुपीज आएगा.
Yes, sir.
कोई डाउट है इस क्वेश्चन में? Is there any doubt in this question?
No, sir.
900. 30 into 30. So you recognize the cost in the P&L for 900. You recognize the revenue in the P&L for 1500. You reversed your refund liability by 1500. You reversed your right to recover inventory by 900. These asset and liability has been reversed, and the sales revenue and expenses has been recognized. Okay. Clear in mind? Okay, so this is the accounting entry which I have passed. You can also write down these accounting entry. This will give you the full clarity. Okay, simple है ना, आप समझ पा रहे हो ना? Just think about that organization. Inventory has gone out. Revenue has been recognized for 970 product into 50. So cost also needs to be recognized for 970 into 30, going by the matching principle. Okay. Now, friends, let me take you to the loyalty points. This question, this kind of a question has come into exam also. So I am taking you to the question number. I believe you guys have this word file, right? Yes. So question number 8. Question number 8. Are you able to see question number 8 on the screen? Okay. Can everybody mute themselves? The company sells the diversified products for the purpose of increasing sales and attract customer. The company during the financial year 23-24 has adopted the following policy. The company has adopted the following policy. Which policy? So to attract the customer and to increase the sale, In 23-24, the company has adopted the following policy. For every purchase of rupees 400, the customer is awarded with 6 points. How many points? 6 points. For every purchase of 400 rupees. Means for every purchase of 100 rupees, 1.5 point kind of. Each point is redeemable on any future purchases. Each point is redeemable on any future purchases of company's same departmental store situated in any of A class city within 3 years, that is up to 31st March 2026. And the customer, you know now. So basically, if you have a loyalty points, you have a reward points, which you have received from the purchases of goods from Louis Philippi, BlackBerry, Hush Puppies. So you can use those reward points all across, all across India in any company showroom, right? If there is a company branded outlet for Louis Philippi, BlackBerry, Hush Puppies, so you can use your reward points in any store. It's not like the store where you have purchased the goods. No, any store. And what is the time frame of this reward point utilization? So these reward points, the validity of the reward points are 3 years, right? So the company can utilize these reward points up to 31st March 2026. Within 3 years, that is up to 31st March 2026. Okay. So while this company has taken this policy in 23-24, and these reward points can be utilized up to 31st March 2026. Value of each reward point is 60 paisa. So what is the value of this 6 reward point on every 400 rupees purchases? 3 rupees 60 paisa. 60 paisa multiplied by 6. 6 is 36. So 3 rupees 60 paisa. Okay. During the financial year 23-24, the company assessed that the sales of the company during the 23-24 is 150 lakhs. So what is the number of reward points if the sales was 150 lakhs? So 150 lakhs divided by 400 multiplied by 6 will give you the number of reward point. What is the count of reward points? What is the count of reward points, friends? Total कितने reward point मिले हैं?
2,25,000, sir.
2,23,000. 2,25,000. So total reward point is 2,25,000 is the total reward points, right? So 150 lakhs divide by, and how will you do this? 150 lakh divide by 400 multiply by 6. This will give you the total number of reward points. So points earned on 150 lakh at the rate of 6 point on every 400. This will give you 2,25,000 reward points. And this is which is given in the question also. Awarded 2,25,000 points to various customers during the year. Third, estimated that out of the awarded points, how much? 2,25,000 points. 54,000 points will remain unredeemed as at 31st March 2024. How many points? 54,000. So 54,000 will remain unredeemed. It means out of 2,25,000, how many points have been redeemed during the year itself by the customers?
1,71,000.
1,71,000 points have been redeemed by the customer, and the customer got a value of 1,71,000 points. Okay. So the only 54,000 points are pending to be redeemed. 54,000 points are pending to be redeemed, which shall be eligible for redemption till 31st March 2026. इसका मतलब ये मुझे liability carry करनी पड़ेगी, right? I have to carry a liability because on 31st March 24, the customer has a time to utilize this by 31st March 2026. Okay. And this company expect only 75% points will be redeemed in the future. What does company expect? Only 75% points will be redeemed in the future. So what does it mean? Whether we need to see 75% of this entire 2,25,000 or we should see the 75% of 54,000. What should we do?
54,000 into 75.
75% of 54,000.
Why not for 2,25,000 complete?
question is saying of the remaining points.
Because 225 minus 54 is already redeemed. वो तो हो चुका है, right? The question is talking about the future, and future is only 75,000 point as on 31st March 2024. Okay, so it is expected that 75% of the unredeemed point will be redeemed in the future. Okay, clear? So how much point is eligible to redeem? Not eligible is not a right word. So how much point the company is expecting that is going to be redeemed in future?
40,500.
40,500.
40,000.
And what is the value of 40,500? 60 पैसा से मल्टीप्लाई कर दीजिए.
24,300.
24,300.
24,300.
And what is
Yes.
the value of 2,25,000 minus 54,000 multiplied by 60 पैसा? 171,000 की वैल्यू क्या है? 171 multiplied by 0.6.
Yes.
1 lakh thousand. 1 lakh
1 lakh?
thousand.
1 lakh 2,600.
2,600.
1 lakh 2,600. Okay. So the value of the points redeemed is 1 lakh 2,600. The value of the point to be redeemed in future is 24,300. The value. Now, what is the total value of the loyalty points? The actual redeemed plus expected to be redeemed. What is the total value of the loyalty points?
1,26,900, sir.
1,26,900. Okay. Whether question is clear up to this point? Is it clear? Clear or not clear?
Yes, sir.
Yes, sir. Clear in mind.
It is clear. So 1,26,900 is the amount which the company is paying, or 1,26,900 is worth of goods and services the company will provide. Yes or no?
Yes, sir.
But what is the amount the company has received in FY 23-24? Total amount?
1,50 lakh.
If I see solution. If I see the company has received INR, how much? 150 lakhs, right? INR
150 lakh. Yeah.
150 lakhs. So if the company has received 150 lakhs, what is the performance obligation the company has to meet? Goods worth rupees 150 lakh right away. आप जब कोई भी प्रोडक्ट
Yes.
खरीदते हो
Yes.
तो आप उतना ही तो पैसा पे करते हो. So day before yesterday I went to Haldiram to buy 5 samosas. Okay, not Haldiram, Bikaner wala. There is a Bikaner wala in Gurgaon. So I went there and I bought 5 samosa. What was the value of the 5 samosa? It was 16 rupees per samosa. So total value I have paid 80 rupees. And I received 5 reward point on 80 rupees spent. The value of the 5 reward point is 5 rupees. So when Bikaner wala has not started this loyalty program, the value of the samosa was 16 rupee only. So when I paid 80 rupee and Bikaner wala received 80 rupee, so what Bikaner wala has delivered to me? Samosa worth 80 rupees, right? So performance obligation 1. What is my performance obligation 1? What is my performance obligation 1? Deliver goods. Deliver goods worth what? Worth what?
Yeah, 150 lakhs.
150.
150,000. Second performance obligation. What is the second performance obligation? The 5
Reward
reward points which I got. Okay. I will accumulate
Reward
some
point,
reward
yes.
points and I will use those reward points in future purchases. For example, by having a multiple purchases, I have accumulated, let's say 80 reward points. Now again, I went to Bikaner wala and I purchased 5 samosa. Whether Bikaner wala will receive any money from me?
No.
No, because I will redeem my 80 points. So it means by getting this 1,50,000, this company is delivering a goods worth rupees 1,50,000, and this company is also promising. The company is also promising the future goods and services. Yes, the future goods and services. Yes, or no? Future
Yes, sir.
goods and services worth how much? 1,26,900 ना, इस 150 के अलावा
Yes.
जो 171 रिडीम हो गए और जो 54,000 का 75% रिडीम होने वाले हैं, so टोटल कितने गुड्स एंड सर्विसेज मिले हैं? 150 plus 126,900. So what is my total? What is my total? So these are the standalone goods and services. What is the total of of this? इसका टोटल क्या है?
150,
INR
151, 26,900.
151 26
26,900.
900. So you are delivering the goods. The total standalone price of the performance obligation is 151,26,900. You have received 150 lakhs. So what is the revenue you are going to recognize? What is the revenue you are going to recognize? What is the revenue relating to this goods of 150 lakh? And what is the revenue relating to this future goods?
Revenue 150 lakhs divided by 151,26,900 into 150 lakhs.
Very
In
good.
ratio of these two.
In the ratio of these two. Very good. The money which we have received is 150. So we will allocate this 150 into the ratio 150 and 1.26900. Okay. So this is what this has to be allocated. So now you guys have understood. Let me show you the solution now. Okay. Because the part which is critical we have understood. So this is my reward point, which is 2,25,000 we have computed. Out of 225, it is estimated that 54,000 points will remain unredeemed in the current year. Further, it is expected that 75% of the unredeemed points will be redeemed in the future. Accordingly, value of points will be computed as follows. Value of points redeemed in the current year is how much? 225 minus 54 multiplied by 0.6, which is 1,02,600. Value of point redeemed in future 24,300. 54,000 multiplied by 75%. Total value of loyalty points 126,900. Revenue recognized for sale of goods 150 divided by 151,26,900 multiply by 150, which is coming out at 148,74,165. 148,74,165. And for 1,26,900, 1,26,900 multiply by what? How will I compute this? 126,900 divided by 151,26,900 multiply by 150. Transaction price multiply by the standalone selling price divided by the total standalone selling price. ये clear है सबको? ये 125,835 और ये, is that clear to everyone?
Yes, sir.
But sir, why we have recognized a revenue of 125,835? Because we have not, so the customer has not yet availed the points equivalent to 54,000 points. 54,000 multiplied by 700, multiplied by 75%, correct? So this is not the revenue which was recognized. So what we have done, we have allocated the revenue. What is the price? What is the allocated price? So we have identified the allocated price for current goods and services and future goods and services, for the value of the loyalty program and for the value of the goods sold. Correct? So 148.74, 125.835. What is my first accounting entry when I have made a sale? Bank account debit by 150. Revenue from sales credit. How much? 148.74, 165. The remaining will be liability under customer loyalty program. This will be liability. This will be liability under customer loyalty program. Now, out of this liability under customer loyalty program, how much points was redeemed? How much point were redeemed? 1,71,000 points were redeemed. Okay. 1 lakh. How much was redeemed?
171.
171. So what is the revenue we are going to recognize? So this 125,835, This 125,835 is a liability for how many points? $171 points plus 54,000 का 75%. Plus 54,000 का 75%.
Yes.
Yes. So how many points are there? So 40,500 points हो गए ना? 40,500 points. Right? So 171 plus 40,500 will give you 2,11,500 points. So 125,835 is a liability for how many points? 211,500 points. ये क्लियर है सबको? मैंने क्या किया? मैंने लाइबिलिटी देखी. लाइबिलिटी is my 125,835 and this liability is for the point already redeemed plus point expected to be redeemed, which is 2,11,500. So 125,835 divided by 2,11,500 multiply by point actually redeemed in 23-24, which is 1,71,000. So 1,01,739 is the liability will be debited and the sales will be credited. And the remaining amount, which is 125,835 minus 101,739. So with that amount, your deferred liability, your loyalty liability will be deferred for that amount. Correct? Any doubt on this question? Any clarification which you required?
No.
What about others?
No, sir.
So Ruchika is asking, sir, why we have not done 75% on 1,71,000? Ruchika, if something, the loyalty points are there, 2,25,000. In the question it is written that out of 2,25,000, only 54,000 points are going to be redeemed in future, are unredeemed in the current year. What does it mean? It means the remaining 225 minus 54, which comes out as 1,71,000. These points has already redeemed. The customer has availed samosa, like me. The customer has availed flight tickets. Okay. So the customer has already availed goods and services by using this 1,71,000 points. Right. Okay. So first of all, what we have done, we have allocated 150 lakhs into the two performance obligation, current goods and services, future goods and services, right? Then we have allocated the transaction price of 150 lakhs between these two performance obligation, right? So for the first performance obligation, it is 148.74 lakhs. For the second, it is 1.25 lakhs, right? Now in 23-24, this 1.25 lakh of revenue, I mean to say loyalty points value. So this 125 is for 171 plus 54,000 ka 75%, which is total comes out at 2,11,500. So if 125,835 is the value for 2,11,500 points, what is the value for 171,000 points? It is 101,739. With that, we have recognized the revenue, recognized the sales, and the remaining will, of course, considered under liability. Remaining will be considered under liability. Is that clear? Is that clear, my dear friends? Clear or clear? I hope it is clear to all of you. So alternative solution, I'm not going to the alternative solution, right? So, but you can also solve like this as well. Okay. Do you want me to do this alternative solution? Should I do this alternative solution also? Okay. Yeah. So friends, we have covered this loyalty program question also. Let me know if you have any doubt on the loyalty program question. Do you have any doubt? No? Okay. Friends, I'm giving a break right now for 10 minutes. It's 8:16 now. We will have a break till 8:26. Okay. And then I'll start further. So, Ashok ji, let's have a break for 10 minutes. Question number Question number 4. And before discussing question number 4, let's discuss the concept of bill and hold arrangement. Let's discuss the concept of bill and hold arrangements. Okay. So let me take you to my my PPT, and we will discuss bill and hold arrangement concept, and then we'll come back to this question. Okay. Just a minute. Bill and hold. Yes, this one. Yes. So bill and hold criteria. What is meant by bill and hold criteria? What does it mean? What does it mean? Can anyone tell me what is the meaning of bill and hold criteria? So let's say I have purchased a refrigerator from one of my friend's showroom. Okay. So I purchased the refrigerator, I paid the money, I got the invoice, but I told my friend that, friend, my house is under renovation. Can you please keep this refrigerator for 15 days? Right. After 15 days, I'll come and take the delivery. So friends, what is the bill and hold criteria? So in this case, what do you think? Whether my friend will recognize the revenue or not? Whether my friend will recognize the revenue when he raise an invoice, I have paid the money. So whether he will recognize the revenue upfront, or he will wait for 10-15 days for me to come take the delivery, then only he will recognize the revenue.
Recognize the revenue upfront.
Recognize the revenue upfront. Okay. So in this case, upfront. So basically, whenever there is a situation of bill and hold criteria, you need to see 4 aspects, right? What are the 4 aspects? The reason for holding the delivery must be substantive. Number 1. Number 2, the product must be identified separately. For example, there are 10 Samsung refrigerator, and I told my friend that I'll take the delivery after 10 days. So if my friend will keep that refrigerator just like all 10 refrigerator, and whenever the party will come, he will sell that refrigerator whenever the customer will come. Okay. So question number 1, the reason must be substantive, that why the asset has been held, why the goods have been held. Number 2, product must be identified separately. Number 3, the product currently must be ready for physical transfer. The product which I have hold with my friend, so I told him 15 days, but even though if I'll go after 3 days, that refrigerator should be available to me, right? It's not like that my friend think that, okay, Alok will come after 15 days, so let me sell this refrigerator to anyone else, and in the next order when the refrigerator will come, I will give it to Alok. Right? It means the product currently must be ready for, is not ready for transfer. The product should always be ready for physical transfer. Okay. The entity cannot have the ability to use the product or direct it to another customer. And the entity should not be able to sell that goods, sell that refrigerator to the other customer, right? Entities that record revenue on bill and hold arrangement should monitor development in this area. So this is just a Gyan word. This is just a Gyan sentence, not relevant. But my dear friends, if the company has to recognize a revenue, on the bill and hold arrangement, 4 conditions must be satisfied. The reason must be substantive. Product should be identified separately. Product currently must be ready for physical transfer, right? अगर physical transfer के लिए ready नहीं है, Like my friend is telling me that Alok, this refrigerator is not complete, right? I have to get the ice tray, I have to get the inner tray for this refrigerator. It will take around 8 to 10 days. So I told him, okay, I'm okay, because I have to take the delivery after 10 days. So I'm okay. So it means the product is not ready for the physical transfer right now. Okay. So reason should be substantive. Product must be identified separately. Product currently must be ready for physical transfer, and entity cannot have the ability to use the product or direct it to the another customer. As I told you, that the product has been earmarked to me, which is Alok. The product cannot be sold to the other customer. Okay. If these criteria satisfied, then the company can recognize upfront revenue in case of bill and hold criteria. Now, friends, let's discuss this illustration. Okay. So the same question is there in question number 4. So do you want me to teach through word file, or do you want me to cover here only? Can I cover here? Same question is there. Question number 4. Okay. An entity enters into a contract with a customer on 1st April 20x1 for the sale of a machine and spare parts. The manufacturing lead time for the machine and spare part is 2 years. An entity enters into a contract with a customer on 1st April 2001. On 1st April 2001. Okay. On 1st April 2001. Just a minute. Yes. With the customer on first for the sale of a machine and spare part. These are the two performance obligations: sale of a machine and spare part. The manufacturing lead time for the machine and spare part is 2 years. Right? It will take 2 years to get ready this machine and spare part. Upon completion of manufacturing, the entity demonstrates that the machine and spare part meet the agreed upon specification in the contract. The promises to transfer the machine and spare parts are distinct and result in two performance obligations that each will be satisfied at a point in time. Right? So once the machine and spare parts have manufactured, the customer is inspected, and the customer has found that these are the two different performance obligation. Machine is a separate performance obligation, a spare part is a separate performance obligation, and the revenue has to be recognized at a point in time. Right? On 31st March 20x3, the customer pays for the machine and spare parts, but only takes physical possession of the machine. Right? So on 31st March X3, the customer pays for the machine and spare part both. But the customer has taken only physical possession of the machine, because spare part will be requiring after. Okay. Although the customer inspects and accept the spare parts, right? The customer request. So the customer is also inspected the spare part as well. So the customer requests that the spare part be stored at the entity's warehouse because of its close proximity to the customer factory. So what was the reason? The reason was the customer wanted that spare part to be stored at the entity warehouse, not in the shop, not in the factory. It has to be in the companies, into the supplier warehouse. Why? Because that supplier warehouse is very close to the customer factory. Because the customer has already paid for spare parts. The spare parts are okay. The customer is inspected also, and customer has told that this has to be stored in the warehouse of the supplier, which is near to the customer factory. The customer has a legal title to the spare parts, and the parts can be identified as belonging to the customer. So the reason are substantive for holding that asset, holding the goods, right? And these parts are identified separately. It is belonging to the customer, right? And customer has a legal title also. Furthermore, the entity store the spare part in a separate section of the warehouse, and the part are ready for immediate shipment in a customer request. जैसे customer की request आएगी, immediately dispatch हो जाएंगे. Okay. The entity expects to hold the spare parts for 2 to 4 years. This supplier is expecting that I need to hold the spare parts for 2 to 4 years, and the entity does not have ability to use the spare parts or direct them to another customer, and the supplier cannot sell these spare parts to any other customer. What was the 4 condition, friends? What was the 4 condition? How will the company recognize the revenue for sale of machine and spare part? Is there any other performance obligation attached to the sale of goods? Two questions. The company has paid the upfront money for machine and spare parts, right? Machine the customer has taken. The spare part the customer has hold. The customer has put on hold spare parts. So the two questions. Question number one, whether the company will recognize the revenue for machine and spare part upfront. Okay, where the company is expecting that the company has to keep this spare part for 2 to 4 years. Okay. Second, in this question, is there any other performance obligation attached to the sale of goods? What is your answer? What is your answer? In this question, if you will see, the entity has made sale of two goods, right? Machine and spare parts, where control is transferred at a point in time. Additionally, the company agrees to hold the spare parts for a customer for a period of 2 to 4 years, which is a separate performance obligation, right? And what is that? That is a custodial service for storing spare parts. Don't you think if you would be the entity, if you would be the supplier, will you hold these goods for 2 to 4 years for a customer free of cost? Answer is no. So this company, this entity is holding the spare part for 2 to 4 in its warehouse in a separate section. This means this company is also providing custodian services, warehouse services, right? So there are not two performance obligations, there are three performance obligations. Number one, sale of machinery. Number two, sale of spare part. Number three, custodian service for storing spare parts, right? So there are three services. And how the revenue for each of the three performance obligation will be recognized? Sale of machinery, since machine has been sold to the customer and physical possession has also been transferred on 31st March 20x3. So revenue from sale of machinery has to be recognized on 31st March 20x3. What about sale of spare parts? What about sale of spare parts? What about sale of spare parts? Whether the revenue from spare part has to be recognized or not recognized? The revenue from sale of spare part, the customer has made payment for the spare parts and legal title has been passed to specifically identified goods. But such spares continue to be physically held by the supplier. In this regard, the company shall evaluate if revenue can be recognized on bill and hold basis if all below criteria are met. What was the criteria? You remember criteria? First criteria, the reason for bill and hold must be substantive. For example, the customer has requested the arrangement. In this case, the customer has specifically requested the entity to store the goods in their warehouse, which is close to the customer factory. Number two, the product must be identified separately as belonging to the customer. Okay. So in this case, whether it is belonging to the customer or not, it is specifically identified and inspected by the customer. Product currently must be ready for physical transfer. So spares are identified and segregated before the delivery. The entity cannot have the ability to use the product or to direct it to another customer. So spares have been segregated and cannot be redirected to any other customer. So in this case, whether this four criteria is meeting or not, yes, four criteria are meeting. Hence, company can recognize revenue. Companies can recognize revenue for what? Company can recognize revenue for sale of spare parts on 31st March 20x3. Is this clear to everyone? Anyone who is not clear on this? Anyone who is not clear on this, guys? Abrakesh, Anushi, Shweta? Anyone who is not clear?
It's clear, sir.
It's clear? Okay. So revenue from spare part has to be recognized. What about custodial service? What about custodian service? Such service shall be given for a period of 2 to 4 years from 31st March 20x3, right? So where services are given uniformly and customer receives and consume benefits simultaneously, this is warehouse service. So warehouse service has to be recognized over a period of time. Over a period of time ही करेंगे ना? Warehouse services. Warehouse service will be recognized over a period of time. Correct? Is that right? Yes or no? Clear? Is that clear? Okay. So friends, we have also covered this question number 4, this bill and hold arrangement. This question is also covered. Yes. So now let's go to a question on service concession arrangement. Question number 5. Very important question from the exam perspective also. Question number 5. Do you understand service concession arrangement? Do you understand the meaning of service concession arrangement? Yeah. Do you understand what is meant by service concession arrangement? Service concession arrangement is an arrangement on public-private partnership. Have you seen the toll roads? You must have seen on the highways, there are toll plaza, right? And if you see the name on the toll plaza, it is Dharmendra Kumar Constructions Private Limited, right? It is some private limited companies. It is some private operators. So government wants to develop the infrastructure, and government is not having the unlimited money. So government invite tenders to the private parties. Government invite tender from the private parties, and government says that I have to, we want to develop this 20 kilometers highway. Okay. So can you develop for us? So why this private party will develop the highway for the government? Until and unless they will not get benefited. So friends, the government told them that if you develop this 20-25 kilometer highway for us, we will give you the toll collection right. You can install a toll plaza here, and whatever vehicle will cross through this toll plaza, they have to pay the toll tax, and it has to be collected by you, and that will be your earning. Okay. So this is known as a service concession arrangement, where the arrangements are happening on public-private partnership, where the government is inviting the private parties to participate in the infrastructure development. And in lieu of that infrastructure development, the government is giving them right to collect the money by use of the public infrastructure. Okay. Now friends, they will invest the money upfront. For example, if they have to they have to construct the toll plaza, they have to develop the highway, so probably they have to invest 100 crore 200 crore upfront, but they will be able to collect the money in the next 20 years. Okay, in the next 20 years they will be able to collect the money, right? So how the accounting will happen when an entity got an service concession arrangement? So how the revenue will be recognized in the books of that private limited entity which has constructed the highway and the toll plaza, and they got a right to collect toll for the next 20 years. Okay. Friends, in this case, the right which is given by the government, it is of two types. Number one, where the government is giving a contractual right to receive cash. What is meant by where the government is giving a contractual right to receive cash? For example, the government is saying that we will pay you 1 lakh rupees for everyday toll plaza. So we are guaranteeing you that you will be able to receive the toll tax of 1 lakh rupees every month, every day. So what happened if this company, if there was a very less footfall of the vehicles, and this company has not received 1 lakh rupees on any particular day, what will happen then?
Government will give the remaining amount.
Government will compensate. Government will give the remaining amount. Let's say on day one, the company has received 80,000 rupees. So government will compensate 20,000 rupees. On the day two, the company has received 1,20,000 rupees. So the company will keep 1 lakh rupee, and the company will transfer this 20,000 rupees or whatever to the government. So basically, if the government is guaranteeing, the government is fixing the amount it is like a financial asset model. The consideration is a financial asset model, right? But the government is not fixing any amount. The government has just given a right to collect toll. You have a right to collect toll. Doesn't matter if 1 rupee will come, it belongs to you. 1 crore will come, it belongs to you. In that case, is there any contractual right to receive cash? Is there any guarantee for the cash? There is no guarantee to the cash. So in this case, this kind of a model is considered as a, this kind of model is considered as a what? This kind of model is considered as a intangible asset model. So friends, in service concession arrangement, the consideration will be in the form of either financial asset model or in the form of intangible asset model, right? In the form of intangible asset model. So let's discuss the question on the service concession arrangement and understood the concept with the help of this question. Okay. This illustration number 75 is exactly same. What is there in your word file? Question number 5. Shall I start discussing this illustration number 75? Should I start? Okay. Right.
Yes, sir.
So service concession arrangement is largely on the basis of public-private partnership. Okay. So let's discuss this question number 75, which is question number 5 of word file. 110 crores. What is my fair value of construction services? 110 crores. So the company is providing the construction, right? The company is constructing the highway and the toll plaza, and the company will receive the toll later on. Okay. So the total expense is 100 crore and the fair value of the construction expense is 110 crore. Total cash flow guaranteed by government under the concession agreement. What is the word which is used? Total cash flow guaranteed. What does this signify? Total cash flow guaranteed.
Financial asset.
Yes. Yes, it is financial asset. It is financial asset, right? Finance revenue. So it is so one thing is clear. This is between financial asset and intangible asset model. This gives me a right to receive. This gives me this gives this A Limited right to receive contractual cash flows, right? Which is 200 crores, and this will be a financial asset model. Okay. Finance revenue over the period of operation phase is 15 crore. Right. So there are two phases in any service concession arrangement. There is a phase of construction and there is a phase of operation, right? ये जो toll plaza आप देखते हो ना, so it took time. The development of highway, the development of the toll plaza, it took, let's say, 1.5 to 2 years. And you must have seen the toll plaza under construction. You must have seen under the construction you are not required to pay anything. But when the toll plaza will become operational, you have to pay the toll tax. Have you seen that? I'm sure you guys have seen that. Yes. So there are two phases, construction phase and operation phase. So it is saying that the finance revenue over the period of operation phase is 15 crore. Other income relates to the services provided during the operation phase. Now, we need to do the accounting of this Bhilwara-Jabalpur toll project. Bhilwara-Jabalpur toll project, right? Now, first of all, what is the amount of the money which has been spent? What is the amount of money which has been spent?
100 crores.
100 crores. What is the fair value of the money which has been spent? Fair value क्या है उसकी? अगर ये
100
कंस्ट्रक्शन सर्विस में करके बेचता तो इसकी फेयर वैल्यू क्या है? 110 crores. 110 crores, right? So the funds which I am deploying as of now, 100 crores, it will give me a right to recover in the next 10, 20, 30 years, up to which I got a right to collect toll, right? तो क्या मैंने जो आज की डेट में पैसा खर्च किया है, right? Should I expense it off right away? Answer is no. This will be like an asset for me. Correct. So by incurring this expense, I am getting a right to receive the money in future. Okay. And what is the fair value? The fair value is 110 crores. So friends, the first accounting entry is during the construction phase. What you will do, the first accounting entry you will pass is financial asset account debit to construction revenue account during the construction phase. Now tell me, financial asset, you guys are clear because you are aware that since the government is giving a guarantee and hence it is a financial asset. But should I recognize the entire revenue of 110 crores upfront? This is for the construction phase. So if I have to recognize a revenue of 110 crores, I need to recognize a cost also. I need to recognize a cost also. What is my cost? My cost is 100 crore. So what is the accounting entry? Cost of construction account debit to bank account. Cost of construction account debit to bank account. This is what I need to pass as an accounting entry during the construction phase. During the construction phase. Okay. You understood this construction phase? Have you understood this? Is that clear or not? So what I did, this construction gives me a right, a fair value. This construction gives me a fair value of 110 crores, right? So what happened? The government has guaranteed 200 crores. गवर्नमेंट ने कितनी गारंटी दी है? 200 करोड़ की गारंटी दी है. उस 200 करोड़ में से गवर्नमेंट ने बोला कि 110 करोड़ pertains to construction phase and the remaining pertains to the operation phase. Remaining pertains to the operation phase, right? So what is my accounting entry in construction phase? Financial asset account debit to construction revenue. Simultaneously, whatever I've expensed, construction cost account debit to bank account. This is the entry which I need to pass in the construction phase. Now, what about operation phase? You remember the question is saying that in the operation phase, finance revenue over the period of operation phase is 15 crore, right? It is 15 crore. So what is the entry? Entry is again financial asset account debit to finance revenue to recognize interest income under the financial asset model. Then 200 crore minus 110 minus 15. This 75 crore is the revenue which is going to be recognized over the operation phase, right? And at the end, this bank account debit to this company. Is there any problem in this question? So what we did, we recognize the revenue relating to the construction phase. We recognize the revenue relating to the operation phase. And this money has been guaranteed by the government. The government, over the period of the service concession arrangement, the government will pay to this company 200 crores. And out of this 200 crores, 110 relating to the construction phase, 15 is relating to the interest income, and the remaining 75 is the revenue, which is for the maintenance of the toll plaza, because this company has to incur recurring cost also. Think about the company which got the service concession arrangement. Think about that company. The company has to spend during the construction. The company has to spend the recurring cost during the operation also. They will deploy their manpower to collect toll. They will maintain the toll and highway, right? So this is the operation phase, and this is how this revenue has to be accounted in the operation phase. Is that clear? Is it clear or not clear?
Clear.
Let's go to the second part. Kolhapur-Nagpur Expressway. The company has also entered into another concession agreement with Government of Maharashtra in the current year. The construction cost for the said project will be 110 crore. What is the construction cost? 110 crore. The fair value of such construction cost is approximately 200 crores. Fair value is 200 crores. The said concession agreement is toll-based project and the company needs to collect the toll from users of the expressway. Under ICAI, UK Limited has recorded the expense incurred on the said project as intangible asset. Friends, in this case, in Kolhapur-Nagpur, whether the government has given any guarantee, in this case, government ne koi guarantee di
No,
hai?
sir.
There is no guarantee. The government has given a right, not the guarantee. So what will be the asset which will be created when this company has done the construction? And when this company has to recover the money, what kind of asset will be created? The rights. Rights are which kind of asset? There is no contractual cash flows, but the government has given a right to collect all. These are intangible asset. This is intangible asset model. So what is the accounting? What is the accounting? The accounting is during the construction. During the construction, what is the accounting? This is the money which this company is expensed. So construction cost to bank, intangible asset to revenue 200 crores, right? And during the operation phase, this intangible asset is going to be amortized. This intangible asset is going to be amortized. Amortization expense to intangible asset, and whatever money the company will collect from the toll, the company will bank account debited to the revenue account during the operation phase. Is that clear? आप सोचो ना कंपनी करेगी क्या? कंस्ट्रक्शन फेज की फेयर वैल्यू है 200 करोड़. So the company has recognized an intangible asset for 200 crores, right? And the company has spent 110 crores, so the company will recognize a cost for that. Now operation phase में क्या होगा? This intangible asset needs to be amortized so that it will become zero by the end of the concession period. And every year the company will collect the toll, so bank account will be debited and revenue will be credited into the operation phase. This is how this accounting has to happen in case of service concession arrangement contracts. Service concession arrangement contracts, right? So I hope this service concession arrangement accounting is clear to all of you. The financial asset model, the intangible asset model, right? And this accounting has to be bifurcated between the construction phase and the operation phase, because the company is providing the construction service as well as operation service. Do you have any question around this question? Yes, Abrikesh. Yeah, Abrikesh, you have question? Whether anyone has any question? Any question? No? Okay. So friends, we have covered 4 questions today in this word file. We have covered this question number 5 also, which is on the service concession arrangement. Service concession arrangements. Okay. Yes, Abrikesh, please ask your question. Abrikesh, you have raised hand. So whatever question you have, please ask your question. Yes, so we have covered this 4 question, bill and hold. What we have covered, loyalty program, reward points we have covered, right to return we have covered, bill and hold arrangement we have covered, and the service concession arrangement we have covered, right? So friends, I would like to conclude the session today. Okay. So I will finish this standard tomorrow. I'm not keeping well and I'm not able to speak more, right? So can I conclude the session right now? Yes. Can I conclude it right now? Yes, Resham, you have the question. Please ask your question. Student, if you have any question, then please raise your question. Yeah. Since no question is there and we have covered all these 4 questions, 4 complex, critical, and big questions today, right? So I will also share this this Word file to ICAI so that this file will be uploaded with my notes. If is there any notes, so these notes will also get captured. Okay. Why revenue credited twice? So Abrikesh is asking, sir, in service concession arrangement, why revenue is credited twice? Okay, let's go to the question. In the first question, Bhilwara Jabalpur, in the first question, what this company will get? This company will get a right to receive cash of how much? 200 crores. And this 200 crore is for the entire lifetime, right? What company is giving? Company is giving the construction service and the company is maintaining the crores. Total amount is 200 crores given by the government. The government has guaranteed 200 crores. So Abrikesh, where I have created the revenue twice. The total revenue is 200 crores only. And this 200 crore will be received from the government. Is that clear now? Now coming to the Kolhapur example. Okay. In Kolhapur example, what happened? In Kolhapur example, what was the fair value of the service which is given? The fair value of the service is 200 crores. What is the amount actual spent? It is 110 crore. So what we did? We have credited the revenue by 200 crores. We credited the revenue by 200 crores. Okay. And this intangible asset has also created. Now, let's say the concession period is 20 years. How this intangible asset will become zero after 20 years? I have to amortize this intangible asset. So what is my expense in the P&L account every year? 10 crore, assuming the life of 20 crores, 20 years. So this 200 revenue I have recognized in the construction phase, and this 200 will be amortized during the operation phase. Right. So whatever income you have taken, that will be expensed off in terms of amortization. Okay. And whatever money you are actually collecting, right? So that money you will record as a revenue every year, because the money you are collecting, which is more like the money which you are receiving, which is more like the revenue for those particular years. Okay. And this 200 is the outcome of this 110 crore, right? Is that clear, Abrikesh? Yeah. So friends, now with your request, with your permission, can I request you to conclude the session? Yes. Ajit ji and Ashok ji. So I am concluding the session now. Okay.
Thank you, sir.
Thank you, madam. Thank you so much. Thanks. So we'll complete this standard tomorrow, right? Thank you.